Lindsay Thomas wants to know your opinion about buying a sovereign gold bond through the secondary market.
It's a good idea. You have different ways of buying gold. One is to buy gold, go and buy its jewelry. But that I think is consumption. That is not buying gold. We all pretend to be making a investment for the bad times or for the extreme bad times, but it's actually consumption. Then buying gold in a relatively purer form, whether it be coins or biscuits or whatever, in some form, issued by a bank, purity is guaranteed. But I don't know how do you realize it, how easy it is to sell. I haven't come across too many examples, too many instances where somebody went with a biscuit or a coin and got the money back. It's not a currency of that kind, but there must be, because gold is a very widely accepted thing. But I don't know what is the transaction cost. If the gold is worth 5,100 rupee, do you get 98 rupee? Or do you get the current value? Do you get 98 rupee? Do you get 95 rupee? Do you get 99 rupee? I don't know. Then you have this gold ETF, which is another form where you give your money to a fund manager and he's investing in gold. And gold is kept exactly in the form the way security market works, which is somebody buys gold in physical form, gives it to somebody, and that receipt is with the bank, with the fund. So you actually have a proportionate ownership of gold in a physical form held somewhere, and those it can change hands. So that also has a cost, because gold funds, gold ETFs, they have a management fee, there'll be a holding fee, there'll be a custodian fee and all that. Then you have a gold fund of fund, which is, because everybody cannot buy gold ETF. So you have a gold fund in which you invest, and that fund manager buys the gold ETF. So it has an added cost, gold ETF plus the cost of that gold fund. That could well be, up to 1% of it. So if you have 100 rupee worth of it, every year there'll be a 1 rupee deduction. Of course, you will be entitled to all the gains, and you will also be penalized. You will also be liable for any depreciation in value. But 1% will be the annual cost of ownership, for example. Sovereign gold bond is the only vehicle in which the government is saying that you will not only get the gold price appreciation, but you will also get interest over and above that. And it will be treated like a capital asset. If you bought it for 100 rupee and sold it for 150 rupee, 50 rupee will be indexed and you will be taxed accordingly, which I think is a great thing. And if you're an original holder, I think it is treated even more concessionally. So this is a good way to hold. This is a good form, but you have to be a little careful about it. Government has issued sovereign gold bonds at different phase ever since it was launched. I think every 3 months it has been launching one. So when you go type SGB in any of the trading portals, you will come across 30 of them, and some of them, and all their prices get adjusted, but they are not actively traded. You have to see that you are buying a sovereign gold bond which is at a slight discount, so that you don't end up buying it at a high price. And there is another complexity to it. All the sovereign gold bonds, they come with an 8-year time period, 8-year time frame. So one bond which you'll buy from the secondary market might have a 7-year residual periods. Some might be expiring in, due for redemption in 2 years time or 3 years time. Then the premium or discount that gets reduced. Then the price of these bonds actually changes in line with the changing outlook of the market, of the gold prices, because these prices will get precisely aligned to the gold prices. Then comes, so time period is one. Then this is another thing, how, the changing outlook. And then third dimension is the general liquidity in that particular bond. There are bonds where there was a huge issuance. That was the time when a lot of investors got excited and bought those bonds. So there is enough liquidity in the market. There are bond issuance, the particular series where there is not enough. If you want to buy, it may not be available. There may not be enough seller of those bonds. So these are the 3 primary drivers of the sovereign gold bonds. Understand it. Look at the price. Don't go and place your buy order tomorrow without understanding at what price are you buying.